Americans have plenty of experience with buying and selling their possessions. For example, we purchase automobiles, antiques, and investments. Later, we can opt to sell these same things, sometimes at a profit. Homes, generally our biggest purchases, we sell all the time. The real estate market is a part of American life that most of us have experienced and profited from. We view our homes as financial assets because there's a large and successful market for their resale. Like antiques, stocks, or businesses, we can convert our homes to cash that can be used for educating our kids, funding our retirements, or purchasing other homes. But there's something else that, like home ownership, is equally widespread. Something else that millions of Americans own, but few have ever viewed as a saleable asset. An asset that can be sold for cash. Why? Primarily because for decades there's been no secondary market. It seems as though the principles of capitalism, which apply to virtually every other asset we own, have not been applied here. But now that's changed. And with this change comes the opportunity for millions of people to consider whether it may be prudent to retain ownership or sell, perhaps for a handsome profit. This asset that's so widely owned but so seldom sold is this. It's life insurance. And in recent years, a large and growing marketplace has emerged that allows individuals to sell their life insurance policies for cash. This presentation will examine some of the reasons why you might consider a sale of your life insurance policy and explain how the secondary marketplace for purchase of life insurance policies works. It's information you need to know because life insurance is no longer a second-class citizen when it comes to being treated like other financial assets. For the first time, Americans have an important new option to consider, one that can make a huge financial and emotional impact on our lives. Over the past decade, a large and ever-growing market has developed for the purchase of life insurance policies. Investors, including a growing number of large institutional funders with sophisticated capital, have realized that they can enjoy profits by purchasing life insurance policies from individuals who may no longer need them and naming themselves as beneficiaries of these policies. To help you understand how both the buyers and sellers of life insurance policies may earn a profit, let's take a moment to review how a life insurance policy works. At its heart, life insurance is a legal contract between an individual and an insurance company. The insurance company guarantees to make a payment at the insured's death in return for premiums that are paid each year. As long as sufficient premiums are paid, the insurance company will pay at the death of the insured. People purchase life insurance for many reasons. One of the most common is to protect family members. If the breadwinner in a family dies prematurely, for instance, the money from the life insurance proceeds can be thought of as a replacement of the breadwinner's lost income. Life insurance proceeds may allow a family to maintain its standard of living, retain its home, educate its kids. In other words, make it possible to provide financial security that otherwise would not be possible. It is also commonly used in both business and estate planning, where it can insure against the premature death of a key employee or provide the funds to pay estate taxes. Life insurance has become so popular and so widely owned because it is both inexpensive to acquire and because its benefits are so important. People buy life insurance, therefore, for good reasons, but over time, circumstances change. Kids grow up and start their own lives. Businesses are sold. Loans are paid off. Tax laws change. Some people get divorced. Sometimes a spouse dies. Sometimes people encounter financial difficulties, and the premiums, which were once easily affordable, become a burden. You see, there's a whole set of reasons people may no longer need their life insurance policies. But traditionally, the only option has been to let the policy lapse, or in the case of some policies, give up the coverage in return for the policy's cash value. But that's changing. And now you may be able to sell your life insurance policy for cash in the secondary marketplace. To illustrate how this might work, we'll look at an example. John is a 70-year-old who owns a $350,000 life insurance policy. Like everyone else who purchases life insurance, John had a good reason for taking out his policy. In his case, he wanted to provide a source of cash to his business if he should die prematurely. This very popular type of life insurance is known as key man insurance. But look at what happened. John didn't die prematurely. In fact, he's retired, and the business has been taken over by his children. John now looks at his life insurance policy in a different light. Now, it's a financial burden that's taking up money he'd rather be able to spend on enhancing his current lifestyle. John could give the policy back to his insurance company for its cash value of $35,000, or he could choose to pay no more premiums and let the policy keep going until it lapses. Or he could do something else. He could seize upon an opportunity to sell his policy in the secondary marketplace. Well, that's precisely what he did. The life insurance agent who originally sold John his policy explained that John could receive a no-cost, non-binding appraisal of its value in the secondary marketplace. The agent also explained that the secondary market for life insurance policies was growing rapidly, and that more and more people were benefiting from being able to sell their policies for cash. Seeing no harm in learning about his options, John agreed to the free appraisal. To start the appraisal process, John completed a simple form and signed an authorization allowing his medical records to be evaluated by potential purchasers of his policy. He also authorized the release of information regarding the status of his life insurance policy. These are critical pieces of information because the investors who might potentially purchase his life insurance policy must make an evaluation both of John's life expectancy and of the ongoing cost of keeping John's life insurance policy in force. Based upon how much money the investor calculates will be required to keep the policy in force and for how long, will determine the amount of money the investor will offer the seller. Importantly, having several investors make offers on the policy can result in a higher offer amount. After about 6 weeks, John's agent returned with the results of the appraisal. John was excited to learn the results. The agent explained that after reviewing his health status and after evaluating his policy, several potential providers made offers of cash payments. The best of these was for $110,000. John decided to sell the policy, and shortly thereafter, his sale closed and he received a check for $110,000. It was a simple process, but powerfully significant. By looking beyond what he thought was his only viable option, taking the $35,000 cash value, John was able to gain an additional $75,000 he otherwise would never have enjoyed. John gained so much because he was able to sell his life insurance policy in the same manner that he is able to sell his home or his stocks or any other asset. The secondary marketplace for life insurance policies provided John an important option he decided to avail himself of. Now, he has $110,000 to use to make his life more enjoyable. If you own a life insurance policy of virtually any type that you are certain you no longer need, you may benefit by having a no-cost and no-obligation appraisal of your policy. In fact, more and more people are realizing that their life insurance policies can provide a significant source of cash while they are still alive to enjoy it. It may be that circumstances related to your health or finances have changed since you purchased your policy. If so, you may be able to enjoy a cash settlement that is dramatically larger than you otherwise would receive. Talk with your life insurance agent today about all your options. Determining what your policy may be worth in the secondary marketplace is easy and starts with a process that takes just a few minutes of your time. It may be the most profitable few minutes you ever spend.